Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast. It's Sunday the 23rd of June. I'm Phil Carroll.
And I'm Kevin Hornsby.
Summer solstice week, the longest day in terms of daylight hours. Nights are drawing in now, Kev. Can you see yourself hanging out at Stonehenge and dancing to the sunrise?
No.
No? Not spiritual at all? Not into the whole thing?
Not New Age spiritual, no.
I mean, I
saw there was a few people stuck some paint on it.
Oh, yeah, it was just stop oil, wasn't it? They sprayed the orange, that orange, special orange paint on there, didn't they? I saw that, and they were wrestled. One of them was wrestled to the ground by a bystander. But, yeah, I mean...
They managed to get paint that doesn't have petroleum products in it, or what?
Well, yeah, that's one thing to consider, isn't it? And the fact that they're all wearing clothes that are made out of oil as well. They've not really thought it through, have they?
Yeah.
So, I mean, I know the pyramids took some construction, but there's been much debate have you seen the stones as well that they transport to Stonehenge from like as far as Marlborough and Wales, many miles away? How do you reckon there is some truth in the fact that they were transported? And I mean, there's a lot of mystery surrounding it, isn't there?
They stuck them in one of those Tesla Cybertrucks, I think, and just drove it across.
Like it. Right. Well, what's been occurring this week? Busy week, admin tasks, good meetings, anything to report? What's been going on in your life?
Moving into ELEG here in the Mediterranean. So arrived here last Saturday and just been putting furniture up. I was watching my wife put IKEA furniture because if I put it up, then I would lose my temper too quickly. So in fact, I didn't even watch her. She just did it. I was amazed that she managed to do it all so quickly. Not amazed that she was able to do it because she can.
It's frustrating, isn't it?
But I just lose the plot. So I said to her, look, I'll go and do something else. So I was bringing boxes in and unpacking some stuff. She put the couple of beds up and stuff. Yeah. We had one of the workers drop one of our cabinets with drawers. So that was really interesting because 3 of the drawers were busted and all the back thing was off it as well. So yeah, nightmare. So it's what it is, I suppose.
Yeah, I mean, on Tuesday I went to the city to attend it. It was actually an AJ Bell Shares Magazine investor event attended by a few companies. Empire Metals were there. But the main attraction for me was Incanthera, and I met in person Tim McCarthy, chairman, and Suzanne, head of communications for Incanthera, and lots of very interesting and enthusiastic shareholders of the company. Tim gave an excellent presentation explaining the backstory to Incanthera from the Bradford University spin out to obviously the agreement with Marionode, and now obviously gearing up for the September product launch and now, twice increased number of units from 25 to 50,000 and then to 100,000, which obviously will ultimately mean more revenues and obviously thus more profit. So listen out.
The question on my lips is Suzanne Brox as nice as she seems?
Yeah, she's lovely. She's absolutely sound. You know, we had a good chat. And
very nice lady in real life. And
yeah,
absolutely. Not in real life, in the contacts we've had with her. So really,
and we'll hear from Suzanne and Tim later on in the show. But let's have a look at some of the news stories which have dominated the headlines this week. I know you saw this one on Friday morning, quite worrying, but a cyber criminal gang, Quillin, has published almost 400 gigabytes of sensitive data stolen from NHS blood testing company Synovis after hacking the firm on the 3rd of June. The leaked data includes patient names, dates of birth, NHS numbers, and business account details. NHS England and Synovis are working to verify the authenticity of the data, and the hack has significantly disrupted pathology services affecting over 3,000 hospital and GP appointments in London. Quillin, claiming to protest against the UK government's insufficient support, unspecified war, demanded a ransom in Bitcoin, which Synovis did not pay. Law enforcement advises against paying ransoms, obviously, as it encourages criminal activity. Ransomware expert Brett Callow noted that the healthcare organizations are prime targets due to the potential for large payouts. Quillin, allegedly based in Russia, has a history of extorting money from various sectors globally. The group's claims of activist motives are viewed skeptically, as they have previously targeted other institutions for financial gain. So What do you make of that story? I mean, it's a bit worrying, isn't it, that they've managed to actually publish this what is obviously very sensitive data from individuals, patients who have been to some of these clinics.
Yeah, it's not good, but it's the new warfare, isn't it?
Yeah,
we live so much of our lives online that we sadly are all at big risk. I don't think we quite realize what risk we're at. Maybe is the more realistic situation.
I don't think there's any way around it, is there? I mean, obviously, even going online these days, it's all about that first person, an electric guitar of this first person data and things like that. And it's like, how much information have companies got on you just from simply having a social media account or even using the internet?
If they haven't got it, they've deduced it from the things that you've put on social media anyway, even your opinions and things like that. So I think they know us better than most people know us, to be honest.
Yeah.
And because of the social media side of things, and also all the data that they can collect from however many sites. Dread to think Facebook, Google, how much information they actually have. And if you live your life constantly online, then they must pretty much know everything about you, especially if you're posting all the time.
Yeah, and they're constantly forcing you to use more online methods, aren't they? Like examples, cash not allowed. You've got to have a pay by phone app if you want to pay for parking. It's like people who don't have a mobile phone, a smartphone to have that, can't park. They can't pay for goods, So it's like everybody's being forced down this funnel to be online and digital. But actually, I bet there's not many who don't have a phone, who don't have access to the internet, and don't have a digital profile online.
Yeah, unless you go to a takeaway shop in most cities and then they want cash.
Absolutely.
They don't want to pay that.
Yeah, absolutely. Yeah. So the other one in the news, and this is the last one, is obviously the Reform and Tories are now neck and neck after a 5% leap for Farage. Sunak drops to -50 on the satisfaction rating. But even worse for Sunak, I don't know if you saw this. This is an absolute shocker. There was a whole betting scandal. Rishi has expressed his anger over allegations that Tory insiders, including Tony Lee, the Conservative Party's director of campaigning, and 2 election candidates, Laura Sanders and Craig Williams, were betting on the election outcome. Sunak promised to boot out anyone found guilty of breaking gambling laws, and the Gambling Commission is investigating these individuals. So what do you make of this? I mean,
every one of his relatives have got a new car.
This one guy, Craig. This one guy, Craig Williams, right? He put £100 bet on for a £400 win, and he's gone and jeopardised his whole career. He's going to be unemployable. Do you know what I mean? For £400.
You'd at least put a few £1,000s if you could, wouldn't you? It's like
unbelievable, that one. I mean, genuinely, I mean, what little trust anyone ever had remaining, is that now completely gone?
To be honest, it has to be stupidity, doesn't it? It's not them trying to get rich, or because I mean the sums involved by all accounts are not huge, but it's just mental. It's like, are you nuts? Like, why?
I don't get it. Anyway, as alluded to the top of the hour, let's move on to our first guest this week. Joined by Tim McCarthy, Chairman, and Suzanne Brox, Head of Communications for Incanthera PLC. Welcome both.
Thank you very much.
Yeah, hi Phil. How are you doing?
Yeah, very good, thanks. Second time we've seen each other this week. So as I alluded to at the top of the show, I attended a nice presentation in the city this week with your good selves. So what did you make of the buzz, Tim and Suzanne?
Yeah, so I'm actually in Zurich as we speak today, speaking to you. Well, if I can sort of give you some feedback first, because I was doing this presentation, as you allude to it, and AJ Bell, I think on Tuesday, wasn't it? Tuesday
That's
evening.
right, Tuesday evening.
Great to see you there, Phil. Thanks for the support. I opened the presentation by saying that I thought there was a real buzz in the room, and there was, and it was palpable. It was packed. People were sort of standing room only at the back, and it felt really good actually, because when you're presenting anything live, like I was on Tuesday evening, you bounce off the room, you bounce off the people, and we did a similar proactive evening about 2 or 3 weeks before that. Which was great to get in front of investors. It always is, but I think I'm getting the feeling there's a little bit more confidence coming back into the market, and that's reflecting itself in the attendance at these evenings, the buzz, the word I can use it in the audience. Yeah, it was a really good experience. And Suzanne, you were in the room obviously with me, so I don't.
Yeah, no, I would completely agree with what you just said, and I think it's certainly there was a buzz in the room. Certainly, there's some really familiar faces. I mean, we've done 2 or 3 of these things. It's very nice to actually be in front of shareholders that know us now, that we've seen them before, they've actually bought in on the back of some of these evenings when we've done the presentations. But the chance to speak to them and get the sentiment actually across quite a wide threshold of different people, different circumstances. And we saw, at that presentation, we saw sort of 4 or 5 companies presenting. So it's a nice cross-section of what's going on in the market at the moment. But I'm certainly hearing that. I'm seeing sort of IPO markets picking up. We were with our lawyers. We signed off our general meeting yesterday, and we put out today the admission of our subscription shares to trading. And they were saying the same thing. There is some real sentiment. There's some M&A activity going on. I think there is a real feeling that, the tide is turning for small caps. And we were at the AQUIS Company of the Year dinner last week, and some of the keynote speakers were saying there is an absolute support for the undervalue going on in the UK smaller cap stocks at the moment. And I think it's been really widely said, and there is definitely a change of feeling that there are better times coming, and I think long overdue. But no, it's palpable, absolutely palpable when you're at these live events. It really is.
Yeah, absolutely. Yeah. So one thing I noticed, and obviously your presentation was well received, Tim, and I think you had an allotted time, and obviously you almost ran over. And I think you only managed to field one question at the end. I think the question was regarding farmers and delisting and things like that, which you kind of addressed, talking about these companies going private. But what was your takeaway in terms of, at the end, you managed to mingle with some shareholders and some of the institutions and some of the fund managers. What were the main questions you received from those people who attended?
Yes, just to sort of explain that to the listeners, these events, we being the companies that are presenting, make the presentation for an allotted time, and there's Q&A afterwards. But yes, you're right, I did actually overrun a little bit, so I only got time for one question. However, I wanted to make sure that I got everything in, because I knew that there's a breakout session afterwards, after all the companies presented, where they have drinks and canapes, and then the audience has got the opportunity to come up to all the presenters and the team to ask questions. And we were overwhelmed a little bit, actually, with the interest that we got once we went out in the breakout room. And it's a whole mixture of questions, actually. All very good, but ranging from just simply, well done, guys, you're doing a fantastic job, to some really searching questions, such as, right, well, this is great, but how are you going to fund it all? And, how are you going to make sure that you don't fall down? And which I get. I mean, they're all genuine questions, and when you've got the opportunity to stand in front of somebody and answer them directly, and this is back to Suzanne's point about, getting in front of these either existing shareholders or potential shareholders, that's where you get the feel for what these guys are wanting to hear and what their concerns are. And as a company, we need to listen to concerns and address them, but also take the opportunity to correct any misunderstandings they've got, probably put a little bit more colour on some of the points that were in the presentation that maybe they didn't get the chance to ask the question there. But overall, it was extremely positive. And I think Suzanne and I sort of laughed towards the end, because we were sort of still in the room when they were trying to clear up and vacuum. Yeah. Because there was
trying to almost like being in a Chinese restaurant, they're trying to take your plates away before you finished eating.
It was a little bit like that, but that was great. It was that situation, because there was a lot of people who want to talk to us, and that's a great place to be in.
Yeah, I came back with such a high from that. And it was a little bit like, as you say, we did Proactive Investor Evening, which is sort of similar format the month before. I think we mentioned, we were still surrounded by people at sort of 10:15, and people were sort of other people making their way home. And both of us were at opposite ends of the room. But the interest in the story, that sort of feel-good factor of the story, where we've come from, what we've managed to achieve, the potential going forward. People love the story, and people have brought in and said I got an email literally yesterday on the way up to Manchester on the train. Someone said, "It was lovely to meet you. The passion that you and Tim kind of discussed over telling us the actual story and the background to it, and how the last announcements that you've just made have come about, and what's gone on behind the scenes. We really value the passion. It's great to get to stand in front of you and meet you and talk about and put some questions across to you." And it was a real feel-good feeling coming back from that, and some really lovely emails that came in personally from people that took a card and said, I've invested once and I've invested 10 times since then. I've put 2 other people in touch with it. I comment regularly on the posts, and there's a brilliant following of some really loyal people, but a very varied mix of people. And yeah, it's been a real joy, actually, to be able to get in front of people, thank them for the loyalty and the belief, but actually sit and field the questions, because it brings it to life for everybody. And there is an absolute palpable buzz when you leave the room with that, and the follow-up too. And I should just mention, actually, that the investor evening that we attended on Tuesday evening, that recording will go live on our website next week. We've just been given that to review, so I will get that launched early next week so that everybody can see that. And I'll put an announcement out to say that that's been launched so people are aware of it too.
Very good. So people will be able to listen to that presentation from Tim, which would be very useful, I think, for anyone. So coming back to Tim, I have the question. So we've just had the presentation and I'm now one of the investors and I'm coming to ask you a question. How are you going to afford to do this? You've gone from 25,000 to 50,000 to 100,000. Have you got the cash to pay for 100,000 of these to be produced straight away?
Short answer to that is yes. And the reason that we've been able to meet the increasing demand from Marino to supply this stock is because, as you guys know, we did an initial fundraising in December. We've had some warrants that got exercised 2-3 months ago. What we've just put out in terms of the subscription, raising 2.6 million new monies, all of that is going into inventory. And so we have more than enough to supply the first production order of 100,000. And we're already thinking about the second order and getting that in place as well. On a longer term, I think that there's a question out there, and we have been asked by a number of commentators. Well, if the demand from Marino and in turn A.S. Watson for the Asian market is going to be so great, how are you going to afford to build that inventory and keep up with them? And there's two parts to how I would answer that. One is, firstly, the source of financial firepower in order to build that inventory is coming from a number of different ways. So firstly, as I've just said, we've had equity investment, which is going straight into the inventory. Once we start earning the first revenues from September, all those revenues will be recirculated back into building inventory. So just to put a sort of some meat around that skeleton, if that's the right expression, if we are putting a production batch, an order into Marino, and that's cost us, say, £10 per unit, well, we're going to get something like 4 times that back of each unit in revenue. So you can see you've got a multiplier effect here. So as we deliver and we get paid, when we get paid the revenue, which is obviously including all the profit, 4 times we can then produce the inventory we delivered on the first order. And you get the multiplier effect. Every time you do that, you get 4 times the amount. So that builds up over a period of time to hopefully be quite a substantial inventory, which we can keep the group supplied with. The other major impact in the future is going to be non-dilutive, and I do stress this, non-dilutive shareholders' interest, trade finance. And we have a number of conversations going on with trade finance groups at the moment where we're looking at potential facilities of 5 million here, 10 million there. And yes, there is a small cost to that. Nothing comes free in life, but it's completely non-dilutive to shareholders. And as we use that money to build inventory alongside recirculating revenues, that's going to give it a real boost. The second part of that is we're not expecting this to get away from us, to pick up on your point. We are working hand in hand as a partnership with both Marino and Watson. They are working with us to say, okay, how much can you and how quickly can you provide us this inventory for both markets? We will not push ahead of you because it's not in their interest, it's not in our interest. If they were to take one order that we give them and spread it very thinly across many, many stores, it's going to go very, very quickly, and we're not going to have the inventory then to replenish in a week or 2 weeks or a month, whatever it may be when they want it replenished. So they're going to work with us, understanding what our production runs are, and then we're going to work out with them how many stores we launch in, how many stores we roll out to ensure that on their expectation of the volume of sales, that we can then supply those stores in a replenishment with the inventory that we've got. So between us, we're all anticipating that we won't get into that situation, that we won't be able to keep up and fund it. But the more funding we can get in whatever shape or form, revenues or trade finance, then that is where the growth is going to come from. And as I say, the multiplier effect is really going to drive this forward. And that's where the revenues come in, the profitability comes in, and that's what drives the market capitalization of this company.
Okay, Tim, I've got a question, because you've said to me in the past you have a 30% margin, but you've just told me you have a 300% margin, as in £10 and you get £40 back.
We got to talk apples and pears, or not talk apples and pears and get them confused. So when we talk about a 30%, we're talking about a 30% bottom line EBITDA. Yeah.
Okay.
So that includes obviously the running cost of the company, etc. But the equation that I said just earlier on in this conversation is right. The value of the order we put in terms of what it costs us to produce, we will get essentially 4 times back in revenue.
But surely that means that if we move a year ahead, okay, and these were the questions I wanted to ask, or a year and a half ahead, let's say the end of 2025, and you're turning over a couple of million bottles of this stuff, or however it's packaged, a year, then your 30% surely must be moving to 40, 50, 60, 70% when you're making basically a 300% margin on the actual product itself.
Yeah, no, it will, Kevin, absolutely. Because one thing that I try to emphasize when we're talking numbers like this is remember us as a company. We're a relatively small company in terms of personnel, and we don't have any sort of manufacturing facilities or anything that we have to maintain and invest in ourselves. We're a very, what I call virtual or outsourcing business model. So our ongoing overheads, even as a public company on AQSE, are relatively small. We're talking maybe just over £1 million a year, £1.2 million a year. Well, when we're generating the sort of revenues which we're talking about potentially going up to the hundreds of millions over the next 2 to 3 years, and we're getting those gross margins which you're talking about, then absolutely that bottom line EBITDA will start to creep up. Absolutely will, because you're not having to cover the overheads any more than once. So once you've covered it once, everything that you drive in extra revenues is incremental profit. It's as simple as that.
Yeah, if we take ourselves 18 months down the line, you've got these potential orders, and based on what the RNS said was that the Asian rollout would be 250,000 and probably happen early next year. And you have intimated that that's probably going to be brought forward. And I'm assuming that 250,000 figure is probably going to be increased as well. And these runs are going to happen every few months. It's not going to be sort of 250,000 and that's it, it's done. So by the end of next year, I can envisage 1-2 million units having been produced and given to Marino. So where does that stand us in terms of the potential for profitability based on the conversation that we've just had? Obviously, it's going to be huge economies of scale. As you say, you've got X amount of fixed costs, which are going to be covered by the first few 100,000 bottles. And then, it's not 100% profit by any stretch, but it's an ever increasing profit margin with the fact that you have a fixed base. So how do you envisage that will look like?
Okay, firstly, just to clarify the 250, when we talk about the next batch potentially getting 250,000, following the 100,000, we're not linking that per se to the Asian rollout. That's what we expect that we would produce to help the rollout in Europe. The situation with Asia is fluid. I think we've indicated that we're in discussion to see if we can bring that launch date for Asia forward. And the volumes there, by implication, will be a lot larger because we're talking about a lot more stalls in the Asian market than we are in Europe. And that's something that we need to agree with A.S. Watson's on the size of those orders, and then in turn, how do we finance them? The profitability, yeah, you're spot on. I mean, it's just however much we can get into the marketplace on the shelves, either through Marino's European stores or A.S. Watson's Asian stores, that will just drive the growth. And I think I've been so bold in the past to say that there is unlimited growth here. When you look at the size of the market and the size of the number of stores that's going to be exposed in across the whole group, it really is a matter of however much finance, as we were just talking about earlier, however much finance we can get into building that inventory, that will go straight on the shelves and generate revenue for us. So it does bring us to another related subject, and that is, we've been asked fairly recently from quite a lot of different sources, well, right, have you had your run on your share price? You've gone from 7p in December to your sort of mid-20s now, and that's a heck of a return for anybody on investment in 6 months. So is that it? Is this a fairly valued company? And you'd expect me to say, no, it isn't fairly valued. It's going to be.
No, I'm telling you, it's not fairly valued, Tim. It's not my company. So
no, but the proof of the pudding, it is all about delivery for us, and that's what we'll start in September when the launch goes, and then how quickly we can get that delivery across all group. and that will drive the revenues. And you're back to the age-old equations of if you've got a certain level of revenue and a certain profit margin, as you were saying, profits start growing with the expansion, then you've got to look at what the profitability is and what the growth rates are going forward. And all that goes into your normal equations about how you value companies like we are going to be in the future. And certainly looking at the research note that was published early in the year, that research note is predicting certain growth, and that translates into value. But I think the questions we're getting, it's probably incumbent on us to be a little bit clearer in one way or the other in the next period, to put something around that, so people to be able to understand what the potential of this company is, which is huge. But if unless we help them to understand that, they're not going to be able to say, well, is 25 pence a fair value? Is 50p a fair value? Or actually, should it be down at 10 pence again? Yeah, and that's something which, working on, Suzanne and I are working on particularly right now with certain advisors, whatever. And hopefully in the next few weeks, we'll be able to help people with that sort of question, and very, very, the very important question. Are you fairly valued, and why should I continue to invest in you? Because
I guess you've got to look at peer valued companies, haven't you, and make an assessment on the revenues and the EBITDA that they're generating, and say, I know I looked at the numbers on Tuesday night with Stanford Note, as you just alluded to, and I think the first 2 years on the two scenarios were pretty much the same, but it was the following year, the 2027, that had a bigger output in terms of the units sold, and that number there it's like 92 million revenues would value the company at, 5-7x. Where do you draw the line? 10x on something like this?
Well, that is where we need to get those comparative statistics, Phil. You're absolutely right. And the two scenarios that you're referring to, the first scenario doesn't involve any assumption of rolling out into Asia. The second assumption is the rollout to Asia in the third year. So we're already talking to Watsons about, an earlier launch date in Asia, and that's where the volume will come from. It's the Asian market where the volume will come from. Yeah. So I think I have said in public, so I don't mind saying it again, that I understand why, but I believe that Stanford note that was produced is being a little conservative, just simply because of timing. What we know, the conversations we're having about how keen the group and Watsons and Mariner in turn are in launching this and getting as much inventory on the shelves as possible. So, that's our current management task. In fact,
the third assumption also, Tim, is that Asia and Europe is not the whole world. So we have the US, we have the Middle East, we have South America, we have many other parts, maybe Australasia if that's not involved with what they're doing. So, I think this is only looking at this product from the point of view of, yes, probably not quite half the world in population terms, but, a big proportion of it. So, you've also got that expansion. Now, you definitely could run too fast. There is no doubt about that, in my view, in this particular situation. But I want people to understand also what this product is, because I think the finances and what you've said are speaking loud. So, Suzanne, tell us what the product does, and you're obviously using the product as well, I presume.
Yes.
So tell us what effect you think it's having, and why you think people are going to use it.
Well, I think back to where you were just talking about the research note, the difficulty is that it's pinning something down that is a peer group, because this is a completely unique product. So we've talked about the science bit, and that actually it's for the first time, it is the holy grail that's been cracked about being able to get within the dermal layer to the cellular structure and actually feed optimum nutrition to the cells so that they can perform at the very best, which is their natural, what the body is naturally designed to do, is to repair and restore and heal itself. So there are many things on the market. It's obviously a very saturated market, the skincare world, but it is about clever and brand concept marketing. And what we have managed to prove is that this is something that can actually get in and get to that critical cellular level and actually really affect change. So if it can affect change just in terms of a cosmetic scenario, it can also clearly, with that delivery technology, affect change in many other ways that we are looking at for the future, and address very, very other, many treatment areas and indications. So what the commercial discussions that we had with Marino originally were not around a range of skincare products, but that's what it developed into, because they understood immediately the difference that there is with our products. And that's what they want, because there is a much more savvy consumer out there these days. I think since COVID, there's a real proactive healthcare sort of revolution. think people are more educated. They want to find things that will naturally help themselves and that they can do for themselves. And I think they're very much more savvy about what they spend their money on, what they put into their skin, what they eat, what's in the environment. And I think our science actually is able to address all of that. And I think that that's what Marino saw, and that's what they asked us to develop in terms of a range. So we have, the face, body, serums, hand creams, etc. And there is the potential to obviously put SPF, which is a natural next step into all of that, and environmental protection factors and those sorts of things. So it is a totally unique range, and it will be something that I think, obviously the proof is in the pudding. We've got to launch it. The big launch is coming in September across Europe, and as we've just alluded to, potentially then further into Asia as we have those discussions. And the proof of the pudding will be how the launch goes and people coming back to buy it. But all of the indications we've had from Marino and from people that try it, and we do have some anecdotal evidence from the samples that we have of people that have tried things, and things have definitely made a difference. Sort of age spots and things that have disappeared, or some blemishes or scarring, various different things like that. So it obviously has to be put out there, and it has to be properly monitored and tested and fed back. But it is absolutely a completely different science and delivery and formulation technique that we have.
So, Tim, I've got one last question that appeared in my head then when Suzanne was talking. What is actually stopping you launching this 2-3 years down the line? You go to L'Oreal and say, would you like our delivery system? It will cost you £10 per application that you do it. Would you like it? What's stopping you?
Well, it's really about corporate strategy, isn't it? How do we get the best value for shareholders over the medium to long term? And at the moment, let me just clarify that the deal with Marino and Watson's is essentially us supplying our brand. This Skin & Cell is not their brand. So you said earlier on, how about expansion into the geographic territories? So if we understand North America or South America, wherever, what will be on the shelf in New York will be exactly the same as on the shelf in Beijing. So you will see the same packaging, this will be the same product. And that is us building that value of that brand and building the product. And Suzanne was just referring to, some of the ideas we've got about expanding the product range. And the obvious first one is an SPS factor. But, there are lots and lots of other ideas that we've got. And, we are talking to the group, AS Watson Group, about that. And because they're interested in keeping the concept alive, not just launching one product range and then everyone gets sort of a bit tired about that. But so we need to keep it fresh and keep it going. When you think about that over the next 2, 3, 4 years, and we're building both in terms of product range, an image, a brand, and we're going geographic territory one by one, you potentially build an enormous company here. So the last thing we want to be doing is giving away that value too quickly by doing some sort of licensing deal or whatever you want to call it with L'Oreal to allow them to use our technology. And at the end of the day, that's our value. Our value is the technology. It's the IP. It's the patented technology we have, what we call the delivery system. And we can load that delivery system up with an awful lot of different actives, awful lot of different profiles. So the last thing that we probably want to be doing is giving the look-see, the inside track on that technology to somebody like L'Oreal, frankly. Now, if L'Oreal want to come and buy us for $5 billion in a few years' time, then that'd be a good return on investment, for our shareholders. But that's another matter.
No, it was a good answer. It was the answer I was expecting as well. But I want everybody to understand that this is proprietary technology. It works. It gets stuff into the dermal level of the skin. And this is the real reason why, as you said earlier, using your words, the things will fly off the shelves, because for the first time, I think, in this section of healthcare, the stuff's actually going to work, because a lot of the time it smells nice, it feels nice, it is nice, but it actually doesn't deliver what it's supposed to deliver. Well, if this smells nice, feels nice, and actually delivers, then why are you going to choose the other one and not choose this one? Once it's out there, it's going to be hopefully something that many, many people and millions of people are going to use all around the world for the next number of years. So to come back to your share price thing, to say that this company is now worth £30 million or thereabouts, a bit less maybe, is comical to say that you've hit the top of the valuation, because from my calculations that I've done, even from the note, which are being conservative, it should be way higher than this. And that's only 1 year, 2 years, 3 years. And, maybe we've got a decade of this and it could be billions. It really could. But anyway, everyone says I'm always too optimistic. But in this case, I don't see there is too many downsides. My real concern is that we don't have enough cash to go as quickly as we would like, which is a fantastic problem to have, but can also be a problem. So I think if you see that as the worst problem, then please take a good look at this company if you're listening, because I think it's got a long way to go.
Thank you for that, Kevin. We ought to employ you as a marketing person on our team. I think you did a great point. But I think we addressed the point that or the question you had earlier about cash flow and supplying the inventory. We're pretty comfortable on that side, and we're comfortable because we're in constant contact with Marriott and Watsons. It's as simple as that. They're not going to run ahead of us. They're going to keep pace with us, and we're going to employ every trick in the book to get as much cash through to build that inventory as we can without diluting shareholders. And again, the valuation will come through. I think I said it on the presentation at AJ Bell last week. That is, this company cannot stay at this valuation with these prospects. It's just impossible. We will start delivering and earning that revenue in September, and it will build from there. And then let's see where we go. But we're all very confident, and we believe we've got all the bases covered, and we just need to keep working very hard, which we are, and delivering, and that's what we intend to do.
Yeah, and I think the last thing is that in these particular systems, where initially it's very, very cash intensive, and then that slackens off and then just becomes a cash cow, then Incanthera is going to become a dividend play within probably 3-4 years, maybe even sooner. But
no, you're way out, Kevin. First year, we promised straight out the back.
Okay.
We are going to pay a dividend off the first year. And when I say the first year, that's our current financial year, which ends in March 25. So obviously we put the numbers together, publish the accounts. On the back of that, we will be announcing a dividend. I can't say what it will be, but we will be generating cash. We are going to be revenue generating, profitable this year. Now that cash will be going, as I explained earlier, straight back into building more inventory to drive revenues. But at the point that we want to recognize what we are achieving for the benefit of shareholders, we will be keeping some back to pay a dividend. It's as simple as that, because the amount of cash we're throwing off with very, very small overheads, I explained earlier, that will allow us to pay those dividends. So I don't know exactly when, probably second half of next year, by the time we finish the accounting and adding up the numbers and all the rest of it. So that is what shareholders have got to look forward to. And we've said it before. This is a potential double dip, if you like, whatever you want to call it, for investors. It's a play on return on investment, simple share price growth, but it's also a yield stock with a dividend. And that yield will grow each year because the amount of cash that we're throwing off, as you say, you call it a cash cow. Yes, it will be a cash cow. In the first few years, all that cash, we're going to go straight back into inventory, drive it even further. But there's going to be more than enough cash being generated to pay a very, very reasonable dividend. So looking at as an attractive investments, this has got to be one. There's not many small companies around like us that are giving the return on investment in pure growth of share price and giving a dividend as well at the same time, which is going to grow.
I can't imagine there's going to be many on AQSE as well doing that sort of thing. You may even be a first. I might be wrong on that, but certainly I don't know of many.
No, because AQUIS is obviously designed to be there for smaller companies. They want access to capital and they want a public profile. And AQUIS are doing an absolutely fabulous job there, I think, for the small company community in the UK. So you wouldn't expect those companies, certainly in their early years, to be producing those sort of dividends and growth. We've used the word many times over the last 6 months. This has been absolutely transformational for us. When we listed on AQUIS in 2020, we weren't expecting to be here. Not at all. We were expecting to get that public profile, raise some capital through the market, which we have done through the AQUIS market, put that into our R&D and build as a normal R&D biotechnology company. We've transformed that now into something completely different. And yes, we may end up being the first company on AQUIS to produce those sort of things, which would be fantastic. But if we can help to demonstrate to other companies out there that AQUIS is a market where you can do these sort of things. And I would be delighted, because AQUIS have been very supportive to us, great market to list on. And, we've had nothing but positive experiences on the market, I have to say. And, we're always keen to give AQUIS a shout out. And Suzanne, you might want to just comment to that, because Suzanne does a lot of the interactions day to day with the guys at AQUIS. So.
Yeah, I mean, they have been since the beginning incredibly supportive. And I think, you mentioned and alluded to it in the webinar on Tuesday evening that, we've traded over 56 million in shares on that platform since December. We've had 17 press announcements out. We are online in every single trader that they are online with in terms of market makers. We're generating a lot of fundraising. I mean, we announced £1 million in December. We've just put another 4 million out a couple of weeks ago. They do champion growth stocks. They give great support in terms of the market making support, in terms of all the publicity and everything else that they do. But I think, we are a great example of what can be done on that market. And I think there's a lot of perception issues out there of lack of liquidity. I mean, we were just promoted to Apex last week, and that gives us greater trading, ability and transparency, liquidity. There's an enormous amount that can be done, and we're proving that can be done on that market. But they have supported us since day one, and they continue to support us. I mean, we've got a couple of events coming up actually in July with them, and then something the other side of the sort of the summer break, which will again just showcase us as exactly what you can do on the stock. But it's a two-way thing. They've supported us. We've got a great product. We've signed a great deal, and we have got some brilliant institutional support. We've got a fantastic, solid retail-based support, and we're doing a lot of work to get the profile up and get the funding in. So, I think it's a two-way thing here.
Very good.
Now, well, on that note, say Tim McCarthy and Suzanne Brox of Incanthera PLC, thanks very much for your time.
Thank you very much.
Good to see you guys again.
Thanks, guys.
And let's move on to our second guest this week. We're joined by John Regan, CEO of Electric Guitar. Welcome back, John.
Thank you very much.
So the company has just announced a strategic collaboration between its primary subsidiary, 3 Radical Limited, and Digital Alchemy, a global marketing automation consultancy. This partnership aims to enhance client acquisition and engagement by combining 3 Radical's gamification and audience engagement solutions with Digital Alchemy's expertise in marketing automation and technological partnerships with Salesforce, Adobe, SaaS, Braze, and HCL. By integrating 3 Radical's SaaS platform, Voco, with Digital Alchemy's hyper-personalization strategies, clients can increase engagement and gather valuable first-party data. This collaboration will strengthen 3 Radical's presence in Asia Pacific, embed it more deeply into client strategies, and improve customer engagement, satisfaction, and retention. You emphasize the significant potential of this collaboration to deliver powerful, data-driven marketing solutions. Sounds like an exciting collaboration. Please tell us more, John.
Thanks for that, Phil. I mean, this is a really exciting development for us. I'm actually over in Singapore now because I've been meeting with the guys at Digital Alchemy, and of course some of the other really interesting clients that we've got out here as well. What this gives to us is 2 key things actually. The first, Digital Alchemy is one of the largest businesses of its type in the Southern Hemisphere, so it really gives us a bit of presence over here and access to their clients. In fact, one of the things we were talking about yesterday was a joint event, which we're planning to do sometime around September, and where we will present the joint offering together to a set of key people, some of which we know and some of which they know. But the other thing, which is also really valuable, is what their product set does for us, because they basically provide the nuts and bolts that make marketing campaigns happen. They're an end-to-end data platform. And so what that means is they're able to broadcast advertising campaigns from the platform and receive and optimize the results from that platform as well. So without that, the advertising doesn't happen. And for that, what that means is we can talk to clients at a much more strategic stage in their planning, because that's at the start. They have to put that platform in place at the start of all of their campaign planning. And if we're talking at that strategic time, then we can talk to them about how much more integrated the 3 Radical technology can be in what they plan to do next. And by that, what I mean is we're a first-party data tool. We are able to provide surveys and audience research, as well as provide engagement. And of course, when media planning is happening, audience research is exactly what they need to do. They need to understand how they're going to target the people to achieve the objectives that they want to achieve. They need to understand where those people are listening to be targeted to. And that's the type of thing that 3 Radical can help with, and it can help understand those people, as well as then being at the other end of the campaign, which is where we are now, where we're tactically deployed to make the most of that data as the results of the campaign start to hit our client's website. The key thing about that strategic engagement is it makes us much more sticky. We're much more involved and much more integral to what our clients will do at that point. And of course, that means that we have opportunity for greater revenue streams. It means we have more embedded relationships with our clients, so they stay with us longer. So for those two reasons, not only do we have access to more people to talk to about the Three Radical product through all of the network that Digital Alchemy have, but we're also able to talk to them in a different way.
Very good. I mean, from the point of view of Free Radical, how will that hopefully increase the bottom line, then revenues, and then subsequently profitability?
Well, some of it's straightforward, Kevin. I mean, more access to prospects means more business wins, means more money. So that is pretty straightforward. But on top of that, and being able to talk to them about deploying Free Radical at the start of their process, again, is another sale. And then the third thing, of course, is if we're more embedded with those clients, well, then we will be involved in multiple campaigns instead of just one, and we're going to get much more repeat business from those clients as well. So there's three key things there that really help us in this region.
So from the point of view of Free Radical, explain the difference of how it has been happening to how it's going to happen, so people can understand.
Yeah, okay. Well, typically, a conversation with a prospect that for Free Radical at the moment starts at the point where a budget has been established, starts at the point where they're already buying media and generating responses to drive to their website. And so the budget is fixed. And quite often, to be honest, they're in a situation where there's some budget left over and people think, okay, what else can I add to this campaign? I'll add some Free Radical technology. So we're pitching at a point where there is a limited budget. Whereas if you're talking to someone at the planning stage, then actually you can demonstrate how effective you're going to be and access much more of that budget and justify a larger budget because they're planning for that budget in the first place. It's not already fixed. So that makes a really big difference in that type of conversation.
Very good. And does this company just work within the boundaries of where you currently are in Free Radical, or is it going to take you into new territories that will be useful for you?
It will take us into new territories because, of course, the pitch goes both ways. We're able to give our clients access to their technology and to their platform and their optimization. So there's another revenue stream for us there because, of course, we get a share of that revenue that we generate for them. But also, of course, they'll be able to introduce us to new business and involve us in their pitches. One of the things which is very handy, actually, is that the sales lead at Digital Alchemy formerly worked for Free Radical in Singapore. So he really understands the product very well and is a great supporter.
Very good. So any last thoughts about why people should buy your shares now at half price from the pre-IPO or from the IPO? I presume this is probably pre-IPO price new enough.
Well, I think the clue is in that sentence at half price. I mean, this represents fantastic value. I think the reality is we've had a few sellers, and that's because people were tied into electric guitar in particular for a long time, and circumstances do change, and some people have had to come out because we are a small cap firm. That's had a bit of an impact on our share price. It's dropped a bit. But now we're at the point where we've done the hard yards of transforming the culture of the business and are moving forward on that. We're now in the phase of announcing new partnerships. This is the point we believe that where things are going to turn and people will begin to see the value of what we're changing at Free Radical.
Okay, John, thanks for your time, and we hope to hear from you in the not too distant future.
Great, thank you very much.
And on to our third guest this week, we're joined by Rupert Verco, CEO of COBR Resources. Welcome back, Rupert.
Thanks, Phil. Thanks for having me. Glad to hear you, Kevin, as well.
Yeah, absolutely, yeah. So since you've last been on, we've seen quite a lot of news, which we can cover a bit later. But firstly, let's talk today's news, where you announced that ongoing in-situ recovery bench-scale testing of a core sample from Poland has revealed exceptionally high head grades, enriched in high-value magnet and heavy rare earth metals. A second sample is being prepared for further bench-scale ISR studies. Metallurgical testing by the Australian Nuclear Science and Technology Organisation, ANSTO, is nearing completion, with full results expected by the end of June. The permeable geology hosting ionic rare earth mineralisation at Poland is globally unique, enabling this first controlled aquifer ISR mining test of rare earth metals. Highlights include a sample head grade of 0.5 metres at 4006 ppm trio, enriched in ND203, PR6211, DY203 and TB203, significantly exceeding previous grades. The grade concentration validates the potential for scalable ISR recovery across an extensive 139 square kilometres. You highlighted the significant potential for low-cost, environmentally friendly rare earth production through ISR. Sounds very promising, Rupert.
Yes, Phil, it does. Look, the progress with ENSO is very promising. I think key takeaway from this news is we're seeing further grade upside, and we're seeing significant enrichment in both magnet and heavy rare earths. And this material is in an ore zone that is very permeable. We're getting good permeabilities in our test work. And this test work, what we're doing is we're emulating the ISR process at a bench scale. And this takes a period of time to precondition, so to push out the moisture of the ore, and then to start the leaching process. So what we're trying to do is we're really trying to reflect what we're hoping to do in sort of 12 months' time in an in-field pilot study in the well field that we've recently put in place at Boland.
So we haven't spoken to you in a few weeks, so tell us what's been happening prior to this, because you had an announcement a couple of weeks ago there as well. Give us a rundown on what that was.
Sure. So we were fortunate to get some good support and raise some further capital. So we have cash in the bank to really execute a strategy to advance the Boland prospect. And what we've done is we've worked on defining three key components, one of them being scale. And what we've initially done is we've done some work where we've gone and re-assayed old uranium-focused soil. And what this work has done is it's confirmed mineralisation over a very broad area that we've modelled out to be roughly 139 square kilometres. And that re-assay work has confirmed mineralisation across this footprint. And we're seeing similar grades as we defined in our initial air core drilling. And what that's enabling us to do is now go back and follow that up with resource-focused drilling, and we can target in on these higher grade areas and adjust our sampling intensity to match the geology that we're defining through this work. So it's a really cost-effective way for us to use our capital and to advance this to a very valuable resource.
Okay, so now at the end of April, you announced the completion of the acquisition of the 100% ownership of the Wadini project. Just talk us through how significant this news is for COBR and sort of the terms, I mean, I know this was done with another company. So tell us how that's all worked out and how that came to be.
Sure, Kevin. So COBR became involved in the Woodner project back in 2018. And over the course of the preceding sort of 5 years, we spent $5 million focused more on gold exploration. We achieved 75% ownership, and really to improve our optionality and move forward. And we see rare earth opportunity being really significant. We needed to acquire 100%, and we've done that via a cash and script issue that now sees us with 100% ownership. What that enables us to really do is to assess options to bring forward production on our gold assets. And what we're looking at with the rare earth opportunities, we believe we have something that could make us a very unique and highly credentialed player in the rare earth game. Sometimes rare earth projects are really constrained by their capital outlay, and ISR really allows us to break through that and make it a very nimble cost profile to bring it into production. So that's why we're so enthused and so encouraged by the results we're seeing that are supporting that thesis and allowing us to really push forward with it.
And you're in Japan and you're speaking to us from Japan. The scenario is that the rare earth conference that you're at, what do you hope to achieve for COBR at this particular conference?
Look, this is a global conference, and what's very interesting about this is there are parties from all components of the rare earth supply chain. So miners, off-takers, OEMs, all in attendance at this conference that is held at the JOGMEC headquarters. So we're very fortunate. We're meeting with groups that could potentially be future off-takers for COBR, and that's an important component of any rare earth project. So, look, it's a great opportunity for us, Kevin, to tell our story and demonstrate why we're different and what that significance is. And look, from an environmental perspective, that sells very well from a market point for a lot of these off-takers. ISR is very low impact, and they see the benefit in that.
Okay, it's been a pleasure speaking to you, Rupert, even though we've been all over the place around the world.
I'm sorry about that, mate.
In 8 hours, but here we are. And thanks for your time.
Thank you, Kevin. Much appreciated.
So let's have a look at some of the movers and shakers of the week. Top 3 performers were Longbow Energy, LBE, CapEx, CPX, and MNRG. The first one, Longbow, was up about 170%. I think it was on the news that there's a strategic pivot to focus on Southeast Asia. And then there was also, I don't know if you saw Kendrick Resources, Kev. They had quite a good run.
Yeah, I saw it was moving up. I mean, it's moved up from a ridiculous valuation of less than £1 million to, close on £2 million now. But so, yeah, for the assets they have in Scandinavia, it was a crazy valuation. So, it's good to see it making a bit of a pop-up. But, I mean, it's still incredibly undervalued from the IPO, really, to be honest.
Yeah, I think there was an announcement on the 21st of June that Colin had made a share purchase of about 1.75 million shares. So as a result, he's now got an interest of about 46 million shares, which represents 19% of the company. So that was, I guess, some of the reason why it started to move up on Friday.
What price did Colin buy them at?
Well, according to the RNS, he bought 1.75 million at 0.7827 pence.
Very good. We've seen it rising to 0.5 at its height this week, but shows confidence, and obviously he owns 20% plus the company now. So it's looking like stuff is happening there.
First Class Metals came back from their suspension, didn't they? And they had a couple of good announcements. And we obviously spoke to Mark Sale earlier in the week. What did you make of the sort of, obviously a little bit of movement in the share price as they came back, and obviously the sale of those couple of assets? What did you make of that news?
Yeah, it proves the model, doesn't it? I mean, that's what we were talking about with Mark. It proves the model that they're trying to take assets and move them up the SON curve and then move them on. Still, just over £2 million market cap with all the assets that they have. Seems very good value, let's put it that way. It did respond positively when it came back after that announcement, went over 3p, I think, and then just dropped back a bit. And then on Friday, it came back up again to 2.7p. But there's a lot of things going on in that company, and Mark is obviously very, very committed to finding the right resource, upgrading those resources to be able to sell them on. And I think there's a lot of value in that company, a lot of value.
So there was also Power Metal Resources had an RNS on the Wednesday. Basically, they confirmed that further to the announcement of the 12th of June, the disposal of the company's 49.9% interest in New Ballarat Gold, which wholly owns Red Rock Australia, a local operating company holding exploration interests in the Victoria Goldfields, Australia, and in South Australia, has been completed.
Yep. Again, just Charles Archer's been doing articles individually on each one of Power Metal's assets over the last week or so. I think he finishes middle of next week. And then I've already spoken to him that he's going to interview Sean Wade here with us once all of those articles are out so people can see. Again, Power Metal is just the combination of all those assets. It's just massively undervalued, and no recognition of potential upside in any of those things. The other one that I've been watching after having a horrific raise was Polarian Imaging.
Yeah.
They were trading about 4.5-5p, and they raised at a penny. Unbelievable. And then this has now gone out. The raise has occurred. It's shown, I think it was a German technology company. It now owns 18 or 19% of it because they participated quite heavily in this raise. So it's now risen up to 2p at one point during the week. On Friday, I think it was finishing down a bit, 1.7p. I presume that's probably profit taken from the people who went in at a penny. If you've got your shares at a penny and you can sell on at 2p a week later, then what do you think most people are going to do? Not most, but certainly going to be proportional. But a lot of people are talking that, it could easily go back to 3, 4, 5p, I think. The tech is brilliant. It's FDA approved. You know, if you remember, this share was where was this share price wise? Only a year ago, maybe.
Many multiples, wasn't it?
I think it was like 50, 60p at one. I mean, I've got the graph here. It says it was over £1 at one point. I mean, I remember in my mind it was certainly, but then absolutely,
it was one of Albert's favourites, wasn't it?
Yeah, absolutely crashed and burned. I mean, it's 52-week range. Its high is 23p, and its low is 0.85 of 1 penny, and now it's sort of 1.7p.
Yeah.
And there's huge potential. I mean, I only got a market cap of 17 million with this technology. It's got to be looking likely to be a buyout target as well. You know, somebody comes, swoops in and buys it. And as I say, that company has over 18% of it. Wouldn't be a big ask for them to buy another 12% on the market and then, you know, just have to take it over. Yeah. So we'll see. It could be an interesting one.
Yeah, and then Sovereign Metals had an announcement on Thursday, basically just stating that the plans to upgrade the 399-kilometre Nakaya-Chinji section of the railway, which is currently underway as part of this government of Malawi's rail strategy and growth plan. That railway line runs across Sovereign's Gasia Rutile graphite tenements from Machinji at the Malawi-Zambia border to Nakaya Junction, where it then connects to the Nacala logistics corridor, providing an export route through the deep water of Nacala. So looks very good. There's have a look on the RNS. There's quite a few pictures of the team there undertaking on obviously those various upgrade works on those railway bridges there. There's some shots of it, you know, all the equipment being used. So well worth a look. And it looks like, you know, the work is in place, and there's a map of it actually where it runs through from Nakaya in Malawi right across Mozambique to right onto the eastern seaboard of Africa to the Nacala deep water port there. So it looks like, you know, if they're upgrading that line, then that would be one kind of route to market, wouldn't it?
Yeah, it could be very interesting. The other thing too that I was looking at this week was, you know, the US dollar got stronger again this week. I mean, how? It's like how and under the circumstances. And the other thing I was reading was that Trump and Biden are head to head, aren't they, on Thursday of this coming week? So that's not to miss TV. I think I want to see whether Biden actually is able to be compos mentis for 90 minutes. Do you reckon? I mean,
there's a lot of that. There's a lot of that going on, isn't there, at the moment? There's a lot of slanging matches to and forth, you know, reminding him of I think Biden sent an ex, and he's saying "Happy birthday, old man," and all this lot, you know, making a point about that he's in his sort of mid-70s. You know, he's not. So there's a lot of that going on, a lot of mudslinging.
But we've got 3 big elections, haven't we? Because the French have called an election, the UK election, the US have an election now, all in the next few months, basically. Okay, the US not till November, but the circus season has begun, if you like. Absolutely. So what about England then?
Yeah, well, we obviously, the Walter, the orangutan that we mentioned last week, got it right, didn't he, with Germany? He called that one the result, so that was good to see him getting that one right. I don't know if you saw that, the opening game, obviously, that the Scots weren't best pleased, but we probably didn't really expect, you know, any different result. I think we said 6-0, and it was I believe 5-1. So I mean, England, I mean, to be honest, very lackluster performance for me. I haven't been impressed at all. Thought that they winged the first game. Second half of the first game against Serbia, I thought they were pretty abysmal. And certainly in the game on Thursday, not impressed at all. Yeah, there was a bit of buzz when Kane got the goal, but that was short-lived, wasn't it? When they responded about 12 minutes later or whatever it was, and with a great goal. So for me, Southgate and the boys have got a lot of work to do if they're going to progress through these group stages.
Yeah, I just from what I watched, they just didn't seem like a team, to be honest.
No,
that's stuff that, you know, they may have very talented players in their positions in their clubs, but
if you're not playing a team, I mean, it
seemed like a team.
There's the news headline on here. It's funny. It says Denmark won, handbrake won, which I thought was good.
Yeah, but I also think everybody reckons they're far, far better than they actually are. Yeah. You know, I mean, I think if they were allowed to play the way that I think they wanted, then I think we'd probably concede a hell of a lot of goals, but maybe we'd score a hell of a lot of goals, and we'd all be quite excited to watch it. I mean, I haven't even gone out my way to watch it. I didn't even realise the game was on early yesterday. I only caught the last 25 minutes.
Have you been blown away by anyone yet? I mean, Germany obviously good, but I think Scotland, to be fair, that made them look a lot better than they were. I mean, I thought Portugal did well to come back from there. They were 1-0 down, and they came back and won 2-1. I thought that was quite a good game. Turkey game was pretty good. Turkey looked good, but again, not very tested. It was Georgia. I mean, not the greatest opponent. So no one's really blown me away in terms of the games I've seen so far.
Yeah, no, I haven't really watched any, to be honest, because too busy moving house and stuff, some moving stuff. So, and even the England games, I only caught bits of them. So I haven't genuinely watched it. I was watching the golf last week. We talked about the US Open last week, and Mr. McIlroy and Bryson DeChambeau, and I did say Bryson DeChambeau would win it, and he did. But the scenario is I didn't realise that Mr. McIlroy would choke so badly. Missed less than a 3-foot putt on the 16th, missed less than a 3-foot putt on the 18th, and wait for the statistic. He hadn't missed a 3-foot putt or under all season.
Yeah.
So what is the definition of a choke? He hadn't missed one all season, and he misses 2 in 3 holes coming down the stretch in the US Open. I feel for him.
Yeah,
I feel for him, but to be honest with you, Bryson DeChambeau, great personality, seems like a great guy, and I love watching him on the LIV Tour, to be honest. The LIV Tour is very entertaining, and yeah, so go Bryson. Mr. 58, he scored a 58 last year in Greenbelt in the LIV Tour, and he can hit it a country mile. He looks the most awkward golfer in the world when he's putting and everything else, but he seems to get it done.
Yeah. I see England are contenders in the T20 World Cup. I think they beat the West Indies, didn't they? And I think they've got a US showdown coming up on Sunday, so that should be an interesting one. Yeah,
it seems to be that the Aussies let us in, didn't they, because of something that happened against Scotland. I did watch the highlights of England-Australia when Australia beat them, but they managed to scrape through the group, and now it's the Super 8s, isn't it? So, yeah, they'll probably be entertaining to watch, I would say. So, maybe try and catch some of those.
Yeah. So, what else has been going on? Anything else you want to talk about? I think we've talked long enough this week. Anything else?
Yeah, I think we've done it. End of.
If you like what you've heard, hit the subscribe icon and also the bell icon for any future notifications. Thanks for listening.
Yeah, thanks for listening, guys.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.